What is going on, everybody? It's Stas here. Welcome back to yet again another video. So in today's video, I'm going to be sharing with you all and breaking down some more stocks and ETFs that I'm watching and looking to trade right now in the middle of January in 2020. And this is kind of an extension to yesterday's video where I talked about some specific ones that I'm watching for this upcoming week. But since the market was closed today on Monday, the 20th of January, due to it being Martin Luther King Day, I figured why not make another list here, comprise some stocks that I didn't talk about in yesterday's video and share them to you all due to the market being closed and due to me having a bit more time to just sit back and analyze some stocks today, in my life, right? So all I ask from you is if you enjoy this video, if you find value in this video, simply go down below for me and hit that like button. Also, consider subscribing and maybe join our Discord group chat if you haven't done so already, or the Strive Smart Facebook group, which both of those are 100% free of charge and are linked down below in the description box. So I don't want to waste any time in today's video. Let's just hop right into it. And these first two stocks I'm going to be talking about today, they've honestly been flying under the radar in my personal opinion, and honestly, at least they've been flying under the radar to me because I haven't really looked at these too much here over the past couple of weeks. And the first one you see here is Colgate-Palmolive. And a lot of people will argue that this type of business will thrive in no matter what type of market condition we're in, whether or not there's a recession, whether or not the economy is just stagnant, or whether or not the economy is exploding. These types of businesses, CL and the next one, might as well just say it now, CLX, both of these companies, and CLX is Clorox, both of these companies, they are, at least that people would hope they do well, right? Because the products they sell, they're needed no matter what. Colgate-Palmolive's toothpaste and obviously Clorox, they make cleaning materials that many people use on a day-to-day basis. So back to CL, and you'll notice both of these patterns, they look quite similar. The past couple of months, it's been quite rough for CL and CLX. CL in particular, this one's gone from $76 down to about $64.75, opening up a 13% to 15% margin of profit. And this is what gets swing traders like myself, I'm mostly a swing trader, right? This is what opens up opportunity for us. This is what really gets us attracted to certain stocks, at least with my style. When I see a big, margin of profit opening on a large cap company, this is kind of what I like to look for when I swing trade. And another important thing is, understand why a company saw a dip, right? Understand why CL has dipped. Understand why CLX has dipped, and this will give you a better understanding on whether or not you want to get in or whether or not it's a company that you'd like to avoid. For example, Altria here, this company has seen a massive sell-off due to tobacco sales decreasing over the past couple of years. This has hit this company. So when you're swing trading this, you have to realize, okay, is this something that I want to get into? Their main business is decreasing, although they have pricing power, which doesn't really affect their net income. It actually increases it. But either way, their largest product is decreasing in sales. Is this something I want to get into? Another one, for example, is Boeing. They're at a big dip right now, but they're having a lot of problems with, obviously, the 737 MAX. They have a ton of planes backlogged, which adds up to billions of dollars in revenue that, hey, if you're a swing trader, you may look at that and be like, with what's going on right now, I rather not. So with CL, I looked into it. They actually had, it might have been CLX. One of them had a solid earnings report, and it seems like both of them, since their previous earnings report, they've been turning around. And honestly, they actually report earnings in the next couple of days, which could really propel the stock to the next level when it comes to CL and CLX. So in all honesty, guys, these are stocks that I'm just looking to get in on this momentum, right? We're clearly out of the downtrend. We're moving above the moving averages. Although some people will argue we're overbought, I'd agree with that. So for me, CL, to get into it, I'd need to see some sort of pull down, maybe to around $70, $69, as that is a level that we've held 3 times in the past, as you guys can see here on this chart. So any pull down, I'd consider entering here on CL, and going to CLX, very similar. We're overbought. Obviously, the downtrend has broken. We're seeing a ridiculous rally here from the bottom at 144 all the way up to now. We're at $157, but I'd like to see some sort of correction, and let me show you guys where here with this little trend line tool. I'd like to see any pull down to the 153 to the 155 area. That general spot, that is where I'd like to at least initiate a position here in Clorox, ticker symbol CLX, and that'd be putting us right around that 50 SMA as well, which is quite an attractive spot based on how these technicals have been moving here over the past couple of weeks. So the next 2 stocks, they're going to be tech stocks, and they both actually report earnings as well in these next couple of days. So this one here is ticker symbol NFLX, also known as Netflix stock, guys. And this one has been fiddling with this $340 level of resistance that we've been seeing over the past couple of days. And if we zoom back out here to the yearly chart, what do we notice? This level has been a support in the past. It's a resistance now, obviously, but the last time we've seen a rally from here, we've rallied and gapped up to about 380 on 3 separate, maybe even arguably 4 separate occasions here in this span from, I'd say, February 2019 to about July 2019. So in my opinion, this is a spot where we could easily break out on Netflix from 340, maybe up initially to about 350, maybe some consolidation there, but ultimately I see 380 in the scope here over the next couple of months. But we first need to see, again, the 345 break. 350 is a strong level of resistance, so there are a lot of major levels before we get to 380, but ultimately I could see this going to 380, especially if they knock earnings out of the park, which actually, guys, the earnings are tomorrow on the 21st. It seems like they are at 5 p.m. Central Standard Time, which is at aftermarket hours. I mean, I think that's right when the market closes Central Standard Time. So this is definitely one worth watching. Amazon's another one that's seen some weakness here over the past couple of days. If we pull out to the 4-hour chart, what do we notice? We notice how we clearly got rejected at 1915, a resistance from a couple months ago, and really the resistance of this channel. Now we're selling off. We're looking to retest the 1850 to 1860 level of support, which happens to be an old not all-time high, but an old resistance at 1850 from back in September. So this is key, in my opinion, for Amazon to hold 1850, and if it were to break, guys, I'd see a definite move down to about 1820, putting us on that 180 SMA, maybe at around this old resistance as a new support as well. So keep an eye here on Amazon. They're reporting earnings on the 30th, so about a week until their earnings report. But either 1850 or 1810, 1820, this general area, I could see it opening up as a nice entry point. So let's talk about natural gas. Although I did talk about this in yesterday's video, I wanted to talk about very quickly the price action that we're seeing right now on the natural gas futures. And for me, I'm looking at NGG20, the February futures here. And what do you know, guys? We're seeing that consolidation like I talked about in yesterday's video and like I talked about in Saturday's video. This is what I was looking for. I wanted to see some sort of consolidation and some sort of bounce back to maybe $2 where we can either capitalize on UGAS, or if we miss that move, which it seems like if we weren't already in it from Friday, we're probably going to miss this move. We could end up shorting the rally, which is kind of what I want to do either way. So the way I'm looking at this is, It's setting up for a bounce back play, right? And I could see it filling up to about $2 again, which is putting us under that 50 SMA on this hourly chart. And from there, I'd watch a break could maybe rally, maybe back up to 210, maybe under that 180 SMA on the 1 hour chart. But a break, or rather a resistance hold here, this could be a nice entry for DGAS, and at that point, DGAS should be at a decent dip where we could end up just buying that dip and rallying with the momentum that DGAS has had. So just keep an eye on natural gas, those little points that I just mentioned. The next stock I want to talk about here is iRobot. IRBT is the ticker symbol. So this is one that we actually talked about a couple days ago, not necessarily in yesterday's video, but I figured I want to watch it for this week, and I didn't talk about it yesterday, so why not mention it to you guys in this video? So iRobot is one that was actually brought to my attention a couple days ago, and I actually like the pattern here. It's obviously not what I typically trade, but it's similar to CL and CLX, where it's breaking out of a longer term downtrend. This is actually a lot longer than CL and CLX, but you guys get the point. We're breaking out, we're seeing a break above the moving averages, and now we're actually breaking above 54, and we tested 57, but we got rejected, and it led us to pull back down to 54, which this could open up an entry point, guys, on this little pull down, especially if we're holding 54, 55, that general area, heading into tomorrow's session, which is kind of what I'm watching for an entry point here. So for iRobot, I like the momentum. I honestly like this pull down. We're still holding the uptrend, and I just want to end up buying it at around 55.10, 55.20, and from there, I honestly see potential up to about $57, like I mentioned, and maybe even higher there, up to about 60, maybe 59.60 on the high end, at least in the short term here, based on these little short-term resistance levels that you'll probably be able to see a little bit better here. Yes, you can on the 90-day chart, right? So iRobot is IRBT. NEO, there's no need to spend too much time on this one, but I didn't talk about it yesterday, but NEO is one that I have a very, very strong opinion on NEO now that they're potentially getting funding here, that it's going to get up to $5, $5.50. Don't just buy because I'm saying that, guys. That's just my opinion here. That's just my belief. Of course, do your own research always, no matter what, and understand what you're trading before you're trading it. But for me, I really think NEO, especially if they get this funding deal, $1 billion from GAC, I think NEO could get to $5.50, no problem, right? On the yearly chart, we can see they were actually at $10 a couple months ago, really 10 months ago to be exact, and they've crashed since then, but on the up and up now, they've been breaking resistance after resistance, which the next one coming up is at $5, and the next one is at $5.50. And again, I think with this deal, an established company getting behind NEO, giving it the money that it needs due to it burning cash like crazy, I think this will bring in more buyers, more volume, pushing the stock up. I think that makes sense here on ticker symbol NIO. So the next one, 3 more here, guys. The last one's actually a subscriber request. This one's going to be SQ, and then we'll get to the request at the end. SQ here is Square Inc. I think I talked about this on Friday's video, but nonetheless, it's seeing a pull down here from 71.50 down to about 69.30, and you guys know me, I like buying dips on stocks that are just showing positive momentum throughout, and overall, this stock is showing positive momentum throughout, and the fact that we are seeing this dip at around that 70.50 level of resistance, that's kind of worrisome, but honestly, it's still holding the uptrend, which gives me really some hope here that it will eventually break above that level and then rally up to about $75, which would be my personal ideal selling target here. And you guys see, that's kind of why I have this $71 alert here, because that's where I'd build a position. But let's say we did pull down to that 50 SMA, 180 SMA on this 4-hour chart, maybe at about $67. That could also open up a dip buy, in my opinion, where we could rally then from $67 back up to $70. But I'll update you guys on that in these next couple of days as the price action really plays out. So Tesla is the next one, TSLA. This is one that is also on a dip here from 547.50 down to about 510, where it did end up closing on Friday. So very simple on Tesla, guys. The main thing I'm watching here is on the 6-month chart. I just need to see this 50 SMA hold. This is very important for the uptrend to be intact, in my opinion. Well, not the grand scheme uptrend. If we pull down to the 180 SMA, it'll still be intact, but the uptrend from the past 2 weeks, 3 weeks, actually more like a month and a half, honestly, has been this 50 SMA. So if we were to break that level, there could be a little selling coming, maybe 480, maybe 460 on the low end, or actually the low end would be 420, back down to that 180 SMA. And who knows, guys, with Tesla, their earnings are actually coming up on the 29th, I believe. Anything could really happen. If they kill earnings, we've seen this happen before. The stock could launch 5-10% back to 550, 560, no problem. If they drop a dud, who knows what happens. If they end up pooping the bed, if you guys know what I'm saying here, you know that phrase. This could go down to about 450, maybe 440, who knows? So this is one that I'm watching, and I'm actually in it, and I'm most likely going to trim some, if not all, of my profits before the earnings report, because I'm scared to hold through, guys. Let's be honest. At least me. I'm being honest here. I'm scared to hold Tesla through because it's a high reward, but it's also a high risk. So for me, I'd rather just lock in the nice chunky profit that I already do have now, since my entry point is around $480. So the last one is FCEL. This is a subscriber request, and honestly, you guys know me. I don't really trade penny stocks too much, and quite honestly, I don't know much about this company, but I'm assuming it's a guy. He wanted me to talk about this stock, and honestly, what I'm seeing here is there must have been some piece of news, obviously, that has shot the stock from 66 cents up to about $3. Obviously, there's got to be a catalyst that has pushed the momentum so high to this stock to literally 5x it in the matter of a month. Okay, so we got that. Now, we've pulled down from that $3 point down to about $2, and it seems like now we're holding that 50 SMA, which means there could be another rally in store here for this stock. We're holding that 50 SMA, and we're actually rallying back up to test a resistance, which if we go on this 20-day chart, we can see this is a resistance that we failed at a couple days ago, and we actually failed at a couple days before that, before rallying all the way up to $3. And I believe if we break this level 240, this could be your trade right here. You see this gap right here? 240 up to about 290. That's where I'd personally consider trading this, and that's why I would put an alert, create alert here, maybe at $2.45 to get triggered when it does. If it breaks that, that's where I'd consider scaling in. And that's just me. If you don't see potential, don't do this. I never give advice for you to buy particular stocks. I'm just giving you all my opinions so you can do your own research and then consider for yourselves if you want to buy. So that's kind of the grand scheme of some more stocks that I'm watching. There's a lot more that I could continue rambling on about, but I don't want to keep you guys too long in this video. And that's it. I hope you guys enjoyed it. If you did, simply go down below for me, hit that like button. Also, consider subscribing to the channel if you want to see further content from me. And if you haven't quite yet taken advantage of the Webull promotion that I have linked down below in the description box, you can actually get 2 free stocks valued up to $1,400 by simply putting $100 into Webull using my affiliate link. And that's free money at the end of the day, guys. You can sell it, buy more stocks, spend it on Chipotle, which honestly, that's probably what I would do. And it's just free money, guys. Just take your free money. That's linked down below in the description box. And the affiliate link also supports the channel and all the free content that I'm putting out here on YouTube. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.